going on, guys? Morning, morning, morning. What's going on? I think you guys can hear me. Let me know if you can hear me in the chat. Doc says you are late. Yeah, late. What's up, Annie? Derek, what's going on? Doc, Naveen, Caleb. Hey, what's up, Caleb? Dan, Daryl, what's up? What's up, guys? Angel Child, Rick James, what's going on? All right, let me actually, you know what? Let me announce this in the Discord real quick. 1 second. I am live now, guys. There you go. I put a pleasant emoji. Click the link above. Hey, Kais, what's going on, man? Good to see you. Good to see you guys. Good to see all of you. Sweden in the house. What's up, Noah? Where in Sweden you from? Gothenburg? Enrique, ¿cómo estás? Jolene, what's going on? All right, let's get started. So I guess the event that everybody was waiting for, that the whole market was waiting for, was the U.S. inflation, and as expected, inflation is the highest that it's been. It rose, supposedly, according to this article, at the fastest pace since 1992. So inflation. Oh, you know what? I'm gonna need to turn that down. Hold on 1 second. Oh, we should be good. Yeah, so it rose for at the fastest pace since 1992. Now, that's not great because obviously the Fed will start needing to think about raising rates. However, they said an article that I read, I don't know, I can't locate it right now. I'm not going to spend time looking for it, but that they're not going to be raising rates or thinking about raising rates until September, which is a lot sooner than they were talking about before, right? They said before that they're not even thinking of raising rates until 2023. So I think that this conversation will come back up in September for sure. But inflation, as expected, is just skyrocketing at the moment with the stimulus as well as the record GDP growth as the economy returns back to normal. Now, that is the reason that we're seeing treasury yields rise a little bit. However, they're not rising as high as some have thought. So we actually opened a hedge on TLT, which is a treasury yield ETF, expecting the treasury yields to rise, and they did, but they have not risen as much yet. So there are bond auctions going on later today. So we'll see how those auctions do. If they don't do well, then we could see yields continue to rise. However, right now, I mean, yeah, they rose a tiny bit, but really nothing it's actually pretty unexpected that inflation would rise that much and the treasury yields would not follow in a significant manner. So we'll see. All right, what's up? Good morning. Happy Thursday. Yes, happy Thursday. Stay on steel plays. Yes, I agree. So we do actually have a steel play on X, which is the United States Steel Corporation. Now, we did have calls on this in the degen section, in the degenerate section, but I actually... I'll get to your question in a second, but I actually closed those just now. I still have the X shares, though. I expect the price of shares, the price of lumber to continue. Actually, let me check on lumber. There was a lumber futures play that I was looking at. Yeah, and I might actually buy a lumber futures contract here. All right, so Ahmet says, hey, bro, are you still recommending an entry for CLNE? I mean... Look, if you don't know how to read a chart, I honestly tell people to stay out of the meme stocks because you can't just buy at, a random moment in time and not really know what that price represents. In this case, I mean, I think CLNE is at a nice discount today. It broke out yesterday, almost 31% day yesterday. So we're seeing a retracement, but it's sitting at the 100-day moving average. And then also it broke out of this descending channel here, right? And as long as we maintain above it, then I think an entry on CLNE is good. But again, learn how to read a chart. I'm not saying you don't, but if you don't, it's going to be very hard to determine where you should enter and exit at. Like if I entered here, I would set a stop limit right below this resistance line of the descending channel. So Mary says, good morning. Thanks for being so informative. My pleasure. This is what I love to do. I must be a sadist or something, but this is what I love doing. CLNE, a meme stock though. It's not a meme stock. I go back and look over my video about it. I was saying that it can benefit from both narratives, right? Yes, there was a lot of chatter on Wall Street Bets about CLNE, and obviously having a 31% day like this could also, it was most likely that the Wall Street Bets factor has played into that 31% incline. However, the stock itself actually is there is a fundamental and a technical case to own the stock. So go back and watch my video. I did some DD on it. Do you think the momentum on Wish is done? I think that you are starting to see a slowdown in meme stocks. However, I mean, this is very typical that you see even on stocks like AMC or GME, you'll have down days after these major up days. Right now, the way that this candle looks here, this doji that's forming right here, after this sell-off candle that we saw yesterday, yeah, I wouldn't mind an entry here. But again, I mean, these aren't blue chips, so size accordingly. Chill on the sizing, and definitely learn how to read a chart. Nobody can tell you exactly what's going to happen, but we can look at data surrounding a stock to try to determine what's going to happen, right? So if we take a look at the short interest, for instance, let's see. Let's look at CLNE. So it looks like, because there was a spike on, I think it was, let me see, estimated short interest. Yeah, so there was a spike on the short interest for CLNE. So if you are looking at the short interest to factor into your narrative, this purple right here is estimated short interest. Look at it. It's like, this is today's data. We see a spike to all-time high in reported short interest. So, and the short interest right now is in the double digits, where just a few days ago it was at 5 or 6. So CLNE is definitely heavily shorted, at least relatively. So if you're looking to play that narrative as well, I mean, look, this candle here on CLNE, as well as this breakout, yeah, I still like an entry here. As I said, you will want to set a stop limit below this resistance here, maybe in the $10 range or so. What are the effects of a stock getting uplisted to the Russell? Nothing. The effects usually happen. It's definitely a buy the rumor, sell the news event, right? So guys, stop with the insane emojis to try to get me to read your question, please. But it's a buy the news. It's a buy the rumor, sell the news event, right? So when the stock gets uplisted, that's usually a sell the news event, because everyone and their mom knows about it, right? Now, you could make a case that on major indexes like the S&P, eventually a stock will have to, or make sense for a stock to rally after it gets listed, because now it is included in a lot of ETFs and funds and whatever, just like we saw with Tesla after entering into the S&P 500, right? But yeah, it has to be a really high profile stock on one of the major indexes, because in the S&P 500, Tesla is definitely in the top 5, right, or top 10. Caleb Vasquez, thoughts on Yalla? Let's look at that. In Arabic, this would be called Yalla, which means let's go. Could mean a lot of other things, but what do you like about this, Caleb? Are you asking from a fundamental standpoint? I mean, from the chart perspective, it looks like it gets sandbagged here at the 50-day moving average quite often, which is where it's at. I mean, every time it pops above the 50-day, we see it come crashing down again. And right now we're moving towards the 50-day moving average. The volume looks pretty weak. Obviously, you have this massive head and shoulders here that has not really played out, but it exists, and you could see a delayed effect from that. I don't know exactly what this stock does fundamentally, so we could take a look at that as well. Let's go to Seeking Alpha. And then I'll talk about, there's some things that I want to talk about here. So I want to talk about, obviously, the meme stocks. We'll get into AMC. We'll get into GameStop. There's a probe that's happening with the SEC. You could see here, GameStop discloses SEC probe into trading of its and stocks of other companies, AMC, Cost, BlackBerry, etc. So, there definitely is some chatter heating up about SEC involvement. Now, in my view, like, the only thing that can railroad this whole operation of these community-driven trades is obviously some sort of forced halt, like we saw in January. So if Robinhood says you can no longer buy GameStop, you can only sell it, or TD Ameritrade says the same thing, that creates false downward pressure on the stock, forcing it to come tumbling down, right? But that is not a natural cause of why these stocks have dropped. And you're starting to see, like, when news stories like this come out, it does start to scare me a bit, that we could be seeing some forced action on these stocks. Now, I definitely don't think it's ethical. You guys know where I stand on this. You're in a free capitalistic market. You can buy any stock for whatever reason at any time, and you don't have to justify that shit to anybody, right? You're not doing anything illegal. So, I'm totally against any sort of action stopping retail traders, obviously, from doing something that's perfectly legal, which is, hey, here's my money, give me a share of the stock. But once you start seeing this chatter heating up, it does start to worry me a little bit, and obviously the rest of the market as well, because you could see a lot of the meme stocks are dropping today. But we'll look into AMC and GME and stuff in a second. I just want to answer Caleb's question. So what does Yalla do? Oh, okay. They're based in Dubai. Yalla Group Limited offers a voice-centric social networking and entertainment platform under the name Yalla. Oh, you know what? I know what this is, because I heard people talk about this when I was in Dubai. But yeah, I mean, again, going back to the chart that I just showed you, it seems to get railroaded at the 50-day moving average almost every single time. So, again, I don't know if you're asking from a technical or fundamental perspective, but yeah, I mean, it's let's see. If looking at the revenues, I mean, the revenues, at least the reported revenues since 2018, continue to grow. Look, I mean, it's one of these things where you're kind of like Jumia, or any one of these other these companies that mimic U.S. companies for their region, especially if the main service or the main company, the main platform, right, is not banned in that country. Like, you can use Facebook if you're in the Middle East. You can use WhatsApp. You can use whatever. Why would you use this, right? So only in China really do you see that effect play out where, okay, Facebook and WhatsApp and all this stuff is banned in China. So obviously the Chinese version of it is likely going to be successful because they're forced to use it. So that's the way that I feel about these platforms that are specific to regions where the main platforms like a Facebook or Instagram or whatever are not banned, right? But again, from a charting perspective, watch out for that 50-day moving average, and you can actually potentially play swings off of that trend there. So that's my thoughts on it. Someone else had a Andrew Hardrath. Can you tell me what Ortex is showing for short interest data on Go EV? Yes, let's look at it. You sound like you had too much Coke last night. Dude, my only vice is fucking coffee, dog. Chill the fuck out. All right, Ortex. Go EV. It's funny. Last night, all I did was work out, have a pretty big dinner, FaceTime with a friend, take a shower, and pass out. All right. Oh, shit. Yeah. Go EV short interest looks pretty damn high. 30% on short interest. Let me look. I mean, that's not the highest that it's ever been, though. But yes, I mean, 30% is pretty damn high. And it's been growing since April, right? In the 30 ranges. If you look at the days to cover, it's almost 6. That's pretty damn high. I didn't even realize Go EV had such high short interest. But there is something that I want to that I want to talk about when it comes to short interest. Just because short interest is high doesn't mean that stock is going to see a short squeeze, okay? I did a study on this. Obviously, I'm not going to go back and try to find the resources right now while we're live. But most stocks that have a high short interest actually never see a short squeeze, right? Because there's so many stocks that are shorted. But what you need in order for a short squeeze to happen is you need there to be an insane amount of volume, like we saw with AMC, like we saw with GME, where you're trading in the hundreds of millions of shares. If that doesn't happen, then short interest can stay at 30% or 40%, and the hedge funds or whoever's shorting it can continue to make money off of it, right? So just keep that in mind, that short interest alone does not determine whether a stock will see a short squeeze. There has to be volume driven in order to force shorts to close. That is what is so amazing about what we're seeing in 2021 with the community driven trades, is that short interest is being pointed out. And so the retail investors are attacking it as a group and buying up shares in order to try to force a short squeeze, right? So keep that in mind. If you're looking at Go EV and you're like, hey, short interest is insane right now, it's above 30, the days to cover is almost 6. Why isn't Go EV seeing a short squeeze? Well, it's because it's most likely not seeing any unusual volume, which is what's needed in order to force hedge funds to close these shorts, okay? So that's that. Bloodhound. AMC's trading at 1,500. All of the orders are being held and delayed 15 to 21 days. The dark pool current trading price will be reflected on all platforms in 15 to 21 days. Well, okay, Bloodhound, thank you for that. Why don't you show me some data? Write a follow-up comment to this and I'll look for it, but show me some sources, right? Some relevant sources that are pointing you to this. I don't think AMC's trading at 1,500. I mean, that doesn't even make sense, because why would AMC trade at 1,500 if right now I could go on my phone and I could just buy a share of AMC at whatever the market price is? Why would anyone buy it at 1,500? That doesn't even make sense. Respectfully, I'm not deriding you or trying to make fun of you. I'm saying it just does not make sense from a supply and demand market standpoint, right? If I can go on my phone right now and buy shares of AMC at market price, why would anyone buy it at 1,500? So, I mean, that honestly sounds like some tinfoil hat business. But again, you know me, I'm receptive to any and all information. If you point me to information, I'm happy to change my mind. So show me a source that's telling you that AMC is trading at 1,500 anywhere. Happy to listen to it, man. Honestly. Ricardo Rodriguez. It's not your normal purview, but I think, what is it? I think HPIL has huge upside potential with a good and proven CEO. Any advice for trading this kind of stock? Um, let's look at it. HPIL, Cybernetic Technologies. I mean, this sounds like a low cap tech stock, if I'm not mistaken. Yeah, I mean, you're talking about a market cap of 22 million. Yeah. I mean, I'm on record as saying that, I don't think it's the time for penny stocks. However, the market is showing an appetite for risk on again. You're seeing some hyper growth stocks that are absolutely killing it, like Skills or Fubo, right? You're seeing that now, whereas before they just look completely dead. You're seeing some SPACs continue to rise. You're seeing, obviously, the meme stock trade or the community-driven trade. You're seeing that back again. So that's telling me that the market is more risk on than it was since February, right? Because since February, the market has really been hesitant to take on any risk. And all you were seeing was this rotation to growth and value plays, which benefited us greatly if you had a well set up portfolio. But, in my view, it definitely was not the time for penny stocks. However, I do see somewhat of a return to it. You could see penny stocks like Humble. Sesson is one of the only penny stocks that I'm in, and Sesson is absolutely killing it. But yeah, I mean, looking at this stock trades below a penny, below a tenth of a penny. So, be careful, obviously. But from a chart perspective, if you look at it since January, it is on an uptrend. You will want to pull up a chart and follow this uptrend here. But anytime it gets to the 50 or 100-day moving average, you could make a case for it. Again, size accordingly. Don't go crazy on it. But the thing with these kinds of stocks is they're not required to report any numbers. So it's very hard to get financials out of these companies, these OTC stocks, right? Because they're not required to report anything. So just be careful with it. Follow this trend if you want. Pull up a chart. Look at the 50-day or the 100-day moving average. It seems to be on an uptrend for 5 months now. So that's my take on it. Could you do a quick review for short-term trades on MFST, ZOM, and ABT? I mean, my man, you're throwing a shit ton of tickers out there. So this will be really quick. This stock, right now looks like, formed a major distribution pattern. Looks like it's finding support here. You could make a case for buying it here. Watch the 300-day moving average, which is the red on my chart. There's nothing here that tells you it's going to pop, but also when you see a stock finding support like this, it is a pretty, I don't want to say low risk because of the environment that the stock trades in, the OTC environment the stock trades in, but it is as low risk, I guess, as can get for an OTC stock, right? Just make sure that you are not bag holding a large amount of this if we fall below support. ZOM, obviously, is not an OTC stock. We've been in XLE for a long time. I did sell my stake as it was forming a double or triple top, and the oil companies are following. I think that there is a lot more upside in energy stocks like FANG, which is Diamondback Energy, which you guys know I'm a fan of, Marathon Oil, MRO, Occidental Petroleum. I think there's a lot more upside there. But yeah, I think oil is going to hit all-time highs this year, especially with inflation. There's chatter of oil hitting close to $100 a barrel. Right now, this is not an optimal entry for ExxonMobil. No, this is a triple top. You're better off buying a put spread here or something, right? But yeah, I do think there's a little bit more upside for petroleum. And then the last ticker you were talking about is, I think, Abbott, right? Yeah, Abbott right here, I think there's a good swing trade. I was looking at this a couple days ago. Sitting at the 300-day moving average, this is a great swing trade here. You can see that the MACD is curling up. I am going to take a note of this to potentially enter after the live stream. But this, to me, looks like an overreaction. Anytime you see these kind of gap downs on major stocks, especially medical stocks, That's usually due to an earnings overreaction or some other sort of overreaction. I will look into why that is. However, I don't even have to look at the news for this type of trade. I would likely just buy Abbott right here, sitting at the 300-day moving average. 1 second. Excuse me. I would likely buy Abbott here, sitting at the 300-day moving average, and set a stop limit right below. I do really like the setup here. Don't mind it at all. Someone is spamming CLNE. All right. Do you see BlackBerry as a good play? TYBRTV. Do you see BlackBerry as a good play to get in short term? Funny is that I talked about BlackBerry and Nokia last month, and not from a meme stock perspective. I said that BlackBerry and Nokia, I think I think I said on Nokia, I said don't laugh at what I'm about to say, but I think that there is a potential upside here. Same with BlackBerry. I think you're a little late because there was definitely upside on BlackBerry when it was forming this inverse cup and handle here, or not inverse. I guess it would be reverse, because the handle comes first. Inverse would be upside down, but reverse cup and handle. Yeah, but I think, I definitely think that the opportunity was mostly missed on BlackBerry. Now, it is part of the Wall Street Bets chatter as well. This is forming a bull flag here. You could make a case for entering here with a stop limit at around $13. But I think most of the move, since I talked about BlackBerry in May, I think most of the move has been missed for sure. Doesn't mean that you can't enter the bull flag that I was just discussing. Somebody else had a question. J.M. Garcia, I know you have mentioned Sesson. What about Sense? I used to trade Sense as well. I know Sense had a big drop yesterday. I think it dropped like 11%. Yeah. I think, I had drawn this trend line well before. I think that there was a good move off of this support trend line. Right now, it's a non-optimal entry in my view. I think with an overheated RSI, you see the MACD starting to curl back to bearish. I don't know that there is a very optimal entry here, unless you know of some other catalyst on Sense. I think there is an FDA catalyst, but I don't think it's as strong a case as Sesson. I mean, Sesson this is amazing. I think if we get FDA approval, Sesson will be, around the $6 to $8 range. I did a whole DD on it, but yeah, I think Sense is not at an optimal buy right now. All right. Okay. Let me talk about Dave the Wanderer. Thank you, Dave. Thank you so much. Let me look at AMC real quick. I haven't talked about it this whole goddamn time. Let me talk about AMC real quick. Thank you, Dave. Appreciate it. You really don't need to do that, but appreciate it. So I actually think AMC here, as I was saying yesterday, is forming a bull flag. And as long as we continue to get volume, I think AMC can continue to go to climb higher, right? So if you look here at this bull flag, AMC is holding this pretty strong. This is at the 2.618 fib level at around $50. I mean, I could easily see AMC pop to the $80 level if we do get more volume. The MACD doesn't look great. It does look like it wants to turn. If I was you and you are looking to, and you have not traded AMC yet, and you're looking for an AMC trade, you can afford to wait to see if it breaks out of this, okay? Now, this is very different than buying AMC to support the movement. If obviously you do what's good for you. If that's your prerogative, then yes, by all means. If you're just looking at it as a pure technician for a swing trade, you can afford to wait to see if it pops, if it breaks out of the bull flag or breaks down. But up to you. What else did I want to look at with AMC? Let's look at the Ortex data real quick. But there's something else I wanted to look at that is currently passing me by. Let's look at what the short interest update looks like for AMC. Oh, what I was saying with AMC in yesterday's video is the shorts were actually, I mean, if part of the motivation of buying AMC, right, is to sandblast the institutions that shorted AMC, that was achieved yesterday. I mean, AMC's short interest, if you look at here, let me pull it up. If you look at AMC's short interest, let me close just the other things. And let me try and zoom in. If you look at AMC's short interest right here, this purple line, AMC's short interest dropped 5% yesterday, meaning shorts were forced to close, and 5% of the open shorts were closed, right? Now, when I was looking at Market Chameleon, because I was looking at the, I'll pull up Market Chameleon in a second, but I was looking at the options data. It looked to me like part of the reason that let's look at AMC real quick. It looked to me that part of the reason that the shorts were closed was because of the fear that the options activity would actually drive the price up. Okay, so here, let's look at the open interest for GME. So if you look at for June 18th, because June 11th expires tomorrow, obviously, but even for June 18th, you look at the open interest, you see that there's just still an insane number of calls being poured into GME. I mean, just today alone, right? And it hasn't even been an hour since the market opened. We're seeing 25,000 new calls at the $145 strike price for AMC. So part of the reason that I think that the shorts were closing was because of the fear. One, because of the technical indicators, right? If you look at this, like if these hedge funds, obviously they have a lot of these advanced quants and algorithms, it points out to them technical indicators, right? So if you're looking at this and you're seeing that the 21 EMA crossed above the 50-day moving average, it's forming a bull flag here, it's holding support here. It looks, for all intents and purposes, like it wants to break out. Again, we definitely need volume for that to happen. And it looks like volume is waning, unfortunately, but it looks like volume aside, for all intents and purposes, it wants to break out. And moreover, we're still getting just a complete downpour of volume in the options markets, right? So for that reason, I think institutions closed a bunch of shorts yesterday, which I guess, again, if that's one of the goals, then that's one of the goals achieved, right? That the institutions are forced to close their shorts. So we saw a 5% drop in shorts yesterday. However, it looks like today, from yesterday, it looks like today we are seeing just a little bit of a peak, an uptick in short interest. It looks like that these shorts are now starting to climb again. So it looks like a battle between obviously those who are looking to keep driving the price higher and institutions who are looking to short AMC. So, I don't think that the trade is dead at all, especially not with this technical setup here. I definitely do think that we do need an uptick in volume though, because this right here, this is definitely not going to help the case. This downtrend in volume. Now, keeping up volume is very hard, especially if there are so many other things to trade, right? If people are pouring their money in CLNE or on Wish or on GME or on whatever. But yeah. Let me take some questions. Good morning, Z Nation. Wow, I've never heard it referred to as such. Just opened up the site. How about FCell? I think there was a great play on. Well, we had a play on FCell. What was the play that we had on FCell? I'll look it up in a second. But we definitely had a play on FCell that we ended up closing. And then you see now this 10% drop. I think they reported earnings. Yeah, I don't mind FCell here sitting at the 50, at the cross between the 50 and the 200-day moving average. But I wouldn't bag hold this for sure. So I would definitely watch out. I do like ChargePoint a lot more than FCell, and I said that because I think that ChargePoint will benefit from whatever infrastructure bill gets signed. But ChargePoint in and of itself is also it's also pretty volatile, right? But I definitely like ChargePoint breaking out of this this descending wedge here. CLNE and Go EV. Yeah, let me look at CLNE once again. But I talked about it at the outset of the live stream. I think that CLNE here is poised for a re-entry, right? Because as long as we remain above this descending channel, I think that there is a solid re-entry here. All right, let's see. Dave the Wanderer, thoughts on Clove? Is the squeeze over yet? All right, let's look, Dave. Wow. Yeah, I mean, Clove was up, what, like 80, 90% in one day? It definitely cannot keep that up. It looks like there was definitely a ton of profit taking yesterday, because what you have to understand with Clove is that there were a lot of bag holders as well. So they took the opportunity to take profits at a price that they will likely, or that they think they'll never see again. So it's not surprising to me that you see this right here. This to me looks like a profit taking candle, right? We opened up at what was it, $28 yesterday, and the stock closed at around 16 or 17. Like this, to me, this is all profit taking. These are people that have been holding Clove, maybe insiders, right? That have been bag holding Clove since it was a SPAC. After the ticker symbol changed, Clove tanked all the way to like $6. So a lot of folks were bag holding this. It's not a surprise to me that there was actually a major dump here, because this was likely not the Wall Street bets traders, but the Clove had a lot of insiders that own the shares. There were also a lot of people who bag hold it after buying a lot of the Chamath SPACs. So this is not surprising to me. And, competing with that is going to be very hard. Do I think it's over yet? I mean, again, these things are very hard to predict. You will have to look at things like short interest. You will have to look at things like volume. We can load that up. I think short interest might have, here, let me see. So days to cover definitely tanked. If you look at estimated short interest, oh, okay. Well, it looks like short interest continues to be high on Clove. So the short interest really started taking off around May 24th. And it looks like short interest, at least as it's recorded on Ortex, is up near 50%. So the factors of a short squeeze are still there. Again, you need buy volume to come in, as opposed to, selling pressure. Like I said, there was a lot of profit taking yesterday. This is what this looks like to me. So all of the variables for a short squeeze are still there. Especially at 50%. 50% reported short interest, and there's likely a lot more shorted behind the scenes. As I stated in my video from yesterday, there are a lot of ways to short a stock that are off of the exchange. You don't just need to short the stock on the open market. You could do synthetic shorts. There are Delta One strategies that one can take advantage of. There's so many ways that you could short using derivatives, which is what part of the reason that Archegos collapsed, is because they were leveraged 4 or 5x using derivatives, as opposed to the open market where you would call up your broker and say, hey, give me 1,000 shares of Clover. I'm going to short it, right? You're really showing your hand there. So if there's 50% short interest on the open market, which is what the Ortex data is reporting, then there's no doubt in my mind that there are even more shorts going on behind the scenes. So again, all the variables are there. You just need the volume to kick in. So predicting volume and predicting how the herd will react is very, very, very hard to do. I will say that if you are to enter Clove right now, this right here is as optimal an entry as you can get, because after the profit taking happened yesterday, and you see today there's another 10% drop, this right here where it's finding support is at previous resistance. So it'll be very interesting to see if we do see an uptick in buying at this level here. So, if you do, then you will likely see the short squeeze continue, because that 50% is very dangerous, and will likely, have to tank, right? That there has to be pressure against that short interest in order for the short squeeze to not be a viable play anymore. Elmer Berrios says, can you look into IVR? Okay. Yeah, I mean, what is it about IVR that you like? IVR has been. Oh, I I think I know why you're asking. So IVR obviously was trading at like the $17, $18 range before the pandemic, currently trading in the $4 range, right? Invesco Mortgage Capital Inc. I think that holding a portion of your portfolio in IVR is not a bad idea, especially since it's been consolidating really since the pandemic. We did have the spike here that took us to almost $9. However, I don't mind an entry here. Now, whether we get back to the $17, $18 range, I bet you that there is a fundamental reason why this stock has not recovered and is not seen, at least at the moment, as a reopening play. So Elmer's talking about Invesco Mortgage Capital. Let's see. I bet you there's a reason. I mean, yeah, even if you just high level the analysis, you could see most of the analysts are either bearish or neutral, and there's a reason for that. It looks like they did a pretty huge offering in May, but that's not the reason. That's not the sole reason that it's down. I think, let's see, taper tantrum may prove deadly for mortgage lenders. I'm just trying to look at the bearish cases here. Invesco Mortgage Capital trading at 30% premium when it arguably should trade at a 20% discount. So it looks like in terms of value, picking through the pieces of Invesco Mortgage's crash, you can look up, fundamental reasons why IVR is down. I don't mind the price that it's at, but based on just a high level reading, obviously I'm not going to go into every single article here, but just based on a high level reading of the analysts' editorial pieces, it looks like there are fundamental reasons from a value standpoint why IVR seems to be overvalued where it's at. So, yeah, I don't mind the price that it's at, but I think that you should do your DD from a fundamental standpoint on why there's a very bearish outlook on IVR, right? So, all right, let's see. Did we talk about CLNE? Yes, a little too much, actually. What's going on with X? I mean, dude, it's a steel play, right? And what's the overreaction here? What's going on with X? It's still on an uptrend. Baba can get manipulated too much. I'm not a huge fan. I'm in the same boat. Andrew, you're talking about Alibaba? Yeah, I'm in the same boat. There's a reason that Alibaba is that I'm not very bullish on Alibaba, and it's because the Chinese government has manipulated its business verticals way too much. The person who was asking about X, I mean, dude, what's the I don't know, what's the outrage here? I don't see it, honestly. All right. Let me take a look at GME, because I haven't talked about GME. So it looks like GME, it has formed a double top here. Now, we didn't quite get to all-time highs that we saw back in January, right? GME formed a double top. It looks like, for all intents and purposes, if we don't get that volume and the MACD is turning bearish again, if we don't get the volume, then we could definitely see a drop back down to the 135 level. I would still look to the major moving averages first as potential support levels. So 185, 160, and then major support at the 135 level. But for all intents and purposes, this does look like a double top. Let me check what the short interest looks like on GME. Oh, and then I wanted to show you guys a pretty cool site. Oh, and I have yet to talk about Bitcoin as well. Dang it. So we'll get into Bitcoin as well. All right, so GME, it looks like short interest. Yeah, it looks like short interest completely tanked for GME. Now, obviously, again, it doesn't mean that, you know, what's going on behind the scenes. It doesn't mean that institutions aren't short using other methods. But it looks like since January, GME short interest has been pretty stable. It is still in the $17 range. It does look like it tanked because GME short interest, remember, was over 100% before. So that's why this graph looks like that. So if we isolate it to just what's going on recently, you can still see that GME short interest has dropped over the last week. Yeah, you can see that GME short interest has dropped over the last week. So, you know, again, with stocks like GME and AMC, I mean, you do need to see that volume coming in, or it's going to likely see a price drop, especially here forming this double top. I think AMC looks a lot better than GME technical wise, right? It looks like, and plus it's cheaper, so folks can dump more money into AMC than they can into GME. But yeah, what is happening with Clove? I talked about it. Rewind a few minutes back. Tilray overpriced. Man, Tilray had a monster move yesterday. And, you know, as I was saying, that I think there will be a refocus on cannabis stocks. Now, it is being railroaded here at the 100-day moving average, and I think this is a profit-taking level for sure in the short term, 100%. But we did buy Tilray off of the 200-day moving average. It went up 70%. And we are now seeing a retracement after being overheated on the RSI at the 100-day moving average. Now, I want to talk about Bitcoin real quick because I have not yet. Bitcoin, to me, looks like, and I've been saying this for a while, to me, it looks like Bitcoin is going to retest, or not retest, is going to try to fill that gap that we have on the Bitcoin futures between the 24K and 27K level. Now, we did break the bull flag to the downside, bounced off of the 300-day moving average, and we are seeing resistance here again at the 21 EMA. I mean, Bitcoin does not look very bullish in the short term. Now, it does not mean that I'm not bullish on Bitcoin in the long term, but it definitely does not look bullish in the short term here. If we take a look at the weekly chart, I mean, I hate to say it, but if this turns into a weekly head and shoulders here, this will be a very, very bearish pattern for Bitcoin. And we can eventually test that. Like I said, there's a gap at the 24K to 27K level. The MACD continues to drop like a rock. So does the RSI. So the weekly, even the long-term indicators on Bitcoin don't look great. As I said before, the average time between the MACD turning bearish on the weekly and it turning bullish again, I think was 100 days when I calculated it last time. The time span between that happening. So yeah. Doesn't mean that Bitcoin isn't, that right now is not a good dollar cost average point for Bitcoin, right? I think sitting at the 300-day moving average at almost a 50% discount, if you were ever interested in Bitcoin at the 60K range, you definitely, you know, it would behoove you to buy Bitcoin at the 300-day moving average here. But yeah. Let's see. JM Garcia, thoughts on Workhorse? Is the squeeze done? I mean, look, again, you know, everyone wants to know if the squeeze is done. Those things are very hard to predict because even if the short interest is high, like I showed with GoEV and with Clover, right? You need the volume coming in. Just because short interest is high does not mean you will see a short squeeze. A short squeeze only happens with rabid buying. That's how a short squeeze kicks off. It's not a short squeeze. Look, it doesn't happen because, you know, short interest is high, therefore short squeeze. That's not how the formula works. The way that it works is short squeeze, the short interest is high, volume comes in attacking those shorts, right? The price starts to climb. As the price climbs, shorts will be forced to cover, thereby buying more shares, thereby driving the price even higher. It's a snowball effect that is driven off of volume and not short interest alone. So trying to predict whether the herd is going to pour more volume into a stock is very hard to predict. It's actually impossible to predict. The only thing you can go by to try to predict sentiment is the options data, right? But looking at Workhorse here, again, I mean, it is just like some of the other stocks I mentioned, it is being roadblocked here at the 100-day moving average, right? And there are a lot of Workhorse bag holders. You're not just talking about those who are looking to trade the momentum in the community trade or the Wall Street bets trade. There are a ton of Workhorse bag holders. So when you get that competing with those who are trying to attack the shorts, right? The ones who have been bag holding Workhorse are looking for any opportunity to drop their bags at a decent price. So that's why you see a lot of profit taking with companies like Clover, with Workhorse. It's not only the momentum traders looking to make a buck off of Workhorse, the bag holders are looking to drop their bags off as well. So there is this battle between the bears who are trying to unload their bags and the bulls. Right now, I mean, it does look like the 100-day moving average is a major roadblock for Workhorse. So based off of technicals alone, you know, this doesn't look too great. Obviously overheated on the RSI as well. If we take a look at Workhorse's short interest, you can and options data, you can try to, you know, surmise whether whether the parameters or the variables still exist for a short squeeze. Now, if we take a look at the estimated short interest, yeah, the short interest is still there. So we're talking about a 51% short interest. Again, the variables are there for a short squeeze. But just because short interest is high does not mean does not mean a short squeeze will take place, right? They need the shorts, for lack of a better term, need to be attacked. Okay, so yes, the short interest is very high. So the variables are not over for sure. But asking me to predict volume, nobody can do that. Honestly, nobody can do that. We could take a look at the what do you call it? We could take a look at the options data to see if what the order sentiment is, right? If we take a look at the open interest, yeah, I mean there is a ton of calls being poured into AMC. I mean into Workhorse, and you could look at the volume of the puts. It's, you know, it pales in comparison to what we see with the calls. So yeah, if you look at the put call open interest ratio, it's negative, meaning that there are more calls than puts being open. So, I mean, it looks like there are still a ton of call option buyers for Workhorse, but you know, you do need the stock volume as well to attack the short interest on the open market. So, all right. One thing that we haven't done actually is take a look at the take a look at the indexes. So you can see that the S&P 500, I mean, it looks pretty flat, right? The S&P 500's up 0.05, Dow Jones up 0.03, NASDAQ's up 0.16. I think that there was an early counter reaction to the inflation data, maybe because the inflation data was somewhat priced in, right? The CPI data was somewhat priced in. So even though the CPI data came in hot, showing that it's the fastest rise in inflation since the early 90s, I think since 1992 is what they said. So almost 30 years, right? There was an early counter reaction where the indexes were up higher. However, it looks like they're flattening out now. And it would not surprise me to see the indexes turn negative potentially tomorrow and maybe for the rest of next week. We'll see. I think that the next major catalyst will be the infrastructure bill and then obviously the full reopening. But I've said before, June is a very choppy month usually. So So is are the summer months aside from July. July is when we tend to see enthusiasm, usually around Independence Day here in the U.S. There is a ton of enthusiasm around the markets for some reason. So I expect July to be potentially a green month. June is going to be choppy. August, September are usually the worst months for trading, right? And then you obviously have the holiday season with October, November, December being strong months. So yeah, we'll see. But there was a counter reaction to the high inflation data this morning. I think the indexes were up a lot higher, and we're starting to see them flatten out. But it is likely going to remain choppy. I'm keeping my TLT hedge open because I think that if you look at TLT, again, this is the ETF that tracks the 20-year Treasury bond. You could see that, and the TLT hedge that I have puts on TLT, meaning I'm expecting it to drop, and we do see a 0.3% decline today. But based on the technicals, the fact that it's in this channel, and the fact that the bond yields may rise, that is why I'm keeping my TLT hedge open. Again, it's a hedge. It's not a main position. And the relationship between the yields and the bond prices is that when yields go up, bond prices go down, and vice versa. That's why I have a put against DLT, because if the yields rise, that means that the bond prices will drop, right? That's why I have a put here. But I'm going to keep it. And I might even open actually, you know what? I might even open a VIX hedge. If we take a look at the VIX, it should be down today. Yeah, so the VIX is down here near support. I definitely will open a VIX hedge as well. Now, the way that it works, I mean, look, the VIX is at major support here. So the way that hedges work, you don't want it to be a main position. You want it to be, like 1% to 5% of your major index portfolio. So if you have, let's just say that you have $10,000 in S&P based stocks, then you want you want your hedge to be between $100 and $500, for instance, right? All right. Let's see if we got any questions here. Humble making a comeback today, possibly. Yeah, Humble's actually been inclining since the 300-day moving average. Yeah, you could see here, since it hit the 300-day back in the third week of May, it's been climbing, but we are now seeing another period of consolidation. I don't know that we'll see a full comeback to the prices that it was trading at before, when it was trading at near $6. When people ask me, sometimes I get asked, what is one stock that you got absolutely wrong? It's definitely Humble. So, all right, let's see. Blah, blah, blah. Let's smash the like button. Yes, I always forget to say that, guys. Smash the like button. Funny enough, it's like I'm trained to say it when I'm recording videos, but not on live streams. So what is your TA on Chewy, please? All right, let's look at Chewy. Chewy is a stock that I actually own and is in the 10K portfolio as well. I think that, there was a great opportunity off the 300-day moving average. Alfred says, thanks for sharing your knowledge. You're a beast. Appreciate that, Alfred, man. Thank you. Thank you so much. Off the, what was I going to say? Oh, yeah. So it formed this big head and shoulders here. There was a good, a potential buy off the 300-day moving average, an optimal buy, I should say, off the 300-day moving average. How did it do in earnings? Did Chewy actually beat earnings? Or is there earning? Let's see. What did Chewy do in earnings? Let's look. Chewy earnings, release dates. Oh, I guess aftermarket close today. Okay. Is it? Yeah, aftermarket close today. Okay. So we should see what we should God, I need more coffee. Yeah. Nomad So Sad said later today. Yes, I can see it here. Aftermarket close today. So how did Chewy react the last few earnings? Actually, there's a good play here. I'm going to send it out on the Discord after we get off the live stream. But what I really like, one of the things I really like about Market Chameleon, again, is their presentation. You can find this data for free anywhere. But if you look at these blue bars here on Market Chameleon, and there should be a link in the description. It should get you some sort of discount if you want to sign up for it. It's an invaluable tool for me. But if you look at these blue bars here, this is the implied move for Chewy based off of a 1 standard deviation move, meaning that from earnings or on earnings, the implied move is going to be plus or minus in between these blue bars here, right? And you can see that Chewy every single time going all the way back to July 2019, that it stays within that range. So it never exceeds that range. So what that tells me is two things. You can either do a short straddle on Chewy, right? Excuse me. You can either do a short straddle on Chewy and collect theta and implied volatility decay, or you can actually open up an iron condor on Chewy, right? And expect it to stay within a certain range. Because if you, this is crazy. You don't typically see this where the stock remains within the expected move each and every time. We're talking about 1, 2, 3, 4, 5, 6, 7, 8, the last 8 times. So you can just based on trend, either open up a short straddle, which I might do depending on the premiums, or an iron condor. And I will definitely send that out in the Discord after I get off the live stream. But those of you that are on the Discord and the mods that are on the Discord, feel free to look at it right now and share your ideas with the rest of the group. And by the way, guys, if you want access to our lovely private trading community where we also support degenerate trades, these trades here are sent out by the members, as well as the trades, obviously, that are sent out by me, right, which you'll see here. But if you want access to this lovely community, link is in the description below. So feel free to join. Would love to have you. All right. Yeah, but Chewy earnings, dude. Whoever put that on my radar, thank you for calling that out. You know, there is a very optimal play here on earnings, and they report earnings after market close. So, all right. Let's see. Is Geo a hold for now? Can you share the short interest? I have a feeling that everyone's asking me about looking up short interest because they don't want to pay for this service, which is fine. God damn, the short interest on Geo, the days to cover is almost 14. Now, days to cover means it's just a measure of how bad a stock is shorted. So obviously you have the short interest, which is high right now. It looks like it's 38%. But days to cover means that if the shorts were to cover using the typical volume that is traded for that stock, right, as a measuring stick, that it would take 14 days to cover all of the shorts that are currently open. That's what days to cover means. This is very high. I mean, you saw with some of the other stocks we were looking at before, this was in the single digits. But 14, that is super high. Yes. Again, short interest high, you definitely need volume coming in, or else the short interest means nothing. Again, there are so many shorted stocks on the market. You guys don't understand. And there are so many heavily shorted stocks in the market. And hedge funds usually make money on those shorts. They're able to get away with it, especially on low float or low market cap stocks like this one. But the only way that a short squeeze happens is if those shorts get attacked, right? So, yeah. Christian Dubois says Wish. All right, let's look at Wish. It doesn't look like, let me see if the short interest is updated for Wish. It doesn't look like there's a lot of short interest data for some reason for Wish on Ortex, but we could take a look at Wish. I have to make a mental marker to keep Chewy. Make a mental note on Chewy to trade it after the live stream. All right. Oh wow. So it looks like, wow. Yeah, this is insane. The open. Oh my God, dude. We got 101,000 calls open today for the $15 call on Wish expiring June 18th. I believe I have this call too, if I'm not mistaken. But that is insane volume. That is absolutely insane volume. Yeah. And you can see on Market Chameleon, it will give you a signal whether it's bullish or bearish based on the options data and whether people are buying options at the ask price or higher, right? Because that is an indication that folks are willing to pay extra, I guess, for those call options. That is insane. All right. So based on the options data alone, it looks like there is positive sentiment, right, for Wish. I can't get, for some reason, I cannot get the short interest to load on Ortex, or it looks like it doesn't have any short interest data on Ortex. You know, we did make a nice pop of almost 50% yesterday. I mean, 2 days ago, and we did open up at almost $15 yesterday, right? But we are now finding support here at the $10, $11 range. Now, I don't mind Wish even as just a regular buy here based on the price targets that it got. Wish was upgraded, and most of the analyst upgrades are in the $20 ranges, right? I did a whole DD on it, but you know, asking whether the squeeze is over, I mean, I don't mind actually a buy here in the $10 range. You will not want to oversize. Obviously, you will want to put a stop limit. Maybe if you buy it at $10, you put a stop limit at like $9, right? Don't kill yourself. Is there a chance that it falls back down to the $7, $8 range? Yeah, of course. Of course there's a chance. There's really nothing here in the technicals that points to a trend continuing besides the fact that just the last two candles found support at right around the same range. But you could see that even if you draw the trend line, we popped above it, but you know, staying above it is what's important. And we are now hovering right around the resistance line. So I don't mind an entry here on Wish at all, but yeah, make sure that you're not oversizing, right? Make sure that you have a stop limit. How do I get access to the Discord? Link is in the description. Fuel Cell, talked about that already. I'm in with the Discord. Yeah, awesome. AMC owned by retail, 80 to 95%. Yeah, I mean, it's been like that for a while, and at least that's what's stated, right? At least that's what's stated. But you know, again, you need volume coming in, or you won't see the effects of a short squeeze, right? A gamma squeeze could still happen because that can be driven by options, but you know, not a short squeeze. Ocugen. Ocugen is a stock that you know, it is risky, and I do like Ocugen. However, again, like I said, it is risky. What it is waiting for, what Ocugen is waiting for is FDA approval. As I stated in, I can't remember what video I talked about, but yeah, I don't know. I mean, what's the question with Ocugen? Not sure. But I mean, it's trading in this range, right? Ever since we see this pop on February, right? It's been trading in this sideways consolidation pattern for a while. Now, you could trade within this trend if you want, but you know, until this trend is broken, then you have to assume that Ocugen stays within this trend. Now, what's the reason for the drop today? I don't know, actually. I haven't had time to look it up. Let's see if we can find something on Seeking Alpha. Let's see. It just says it's among the losers in terms of healthcare stocks. Ocugen needs another trial. Let's see. Ocugen and Moderna both made news related to COVID vaccines. Shares are plunging. Okay, as it will need another trial. That's what it is. Okay. So the vaccine candidate that I talked about, right? And I do like any sort of overreaction on Ocugen, because just needing another vaccine trial, that is an overreaction. That does not preclude it from being approved, right? So I would buy the dip on Ocugen again, as long as it stays within this trend here, right? As long as it doesn't drop below like the 550 range, I don't mind a buy on Ocugen in hopes that its COVID vaccine gets approved. But the news coming out that it will need another trial, meaning that the trials that have been conducted up until this point are not enough to get it over the FDA hump, right? And the fact that it will need another trial is what caused the shares to plunge. But that to me is an overreaction, because again, it doesn't preclude it from actually being approved as a vaccine eventually. So if you can get Ocugen at a discount in the $5 to $7 range, yeah, I don't mind a hold here for sure. I don't mind a hold here. But as I said in the video that I discussed Ocugen, this is a risky stock because you are, it's hinging on FDA approval, right? Its survival is based on that. And if it doesn't get that, then we will see Ocugen go back to a penny stock, obviously. But yeah. Ocugen short interest, please. I don't think short interest matters at all. I mean, in this case, we're talking about a trial here, right? We're talking about a vaccine trial, and I don't know that the short interest is even high enough to even matter, right? I mean, it says short interest is 22, but days to cover is less than a day. And this isn't the reason that Ocugen dropped. Obviously, there is a major fundamental reason that it dropped. But it looks like the short interest is, I mean, if it interests you, it looks like short interest is rising. But again, you need volume coming in to attack those shorts. So Ocugen had a few offerings too. Very good point, Queenie. Queenie says Ocugen had a few offerings too. Always coming in with the hot takes. Queenie always got some good takes. Vote blah, blah, blah. Let's see. What about Sundial? AMC dropping. Is this a bad sign? I talked about AMC. And yeah, I mean, again, guys, like, what is your objective here? What is your objective here? If your objective is to support the movement and that's why you're buying shares, by all means, go ahead. If your objective is, hey, I want to trade and I don't want to lose money, then you have to look at these things objectively, right? And people don't want to contend with that. Everyone wants the perma bull story to continue, right? Like they want AMC to go to 100,000 or whatever they said. But you need insane volume for any price hike to happen. So if you're buying AMC in support of a movement, by all means, you're looking at it like a donation, by all means. Yes, fine. If you're looking at it purely as a trade, then be objective about it, right? Don't be hyperbolic. Don't get into your feelings and your emotions. Look at it objectively. Look at this like you would look at any other stock. And that's why I said in the beginning of the video, if that is your objective, is just a trade, this is a bull flag. You don't want to make a trade here until it pops out of the bull flag. Simple as that. Because if the bull flag, if it starts breaking below the resistance of the bull flag, then yeah, you're going to look at maybe the $35 range for AMC as the next level of support where you see this gap here, right? And the 21 EMA. So you can't have your cake and eat it too, all right? So it's like either you are supporting the movement, which if that's your prerogative, great. Either you are swing trading and all you're doing is trying to make money and not lose money. If that's your prerogative, that's great too. But decide what camp you're in and really trade according to that. What happened to CLNE? What do you mean? I talked about this ad nauseum. Broke out of the bull flag, had an insane day yesterday, and now we are seeing profit taking. I mean, broke out of the descending channel, had an insane day yesterday. Now we're seeing profit taking, and it is looking to find support at the resistance of that channel. I mean, these are pretty typical. This is pretty typical market behavior, right? As I said yesterday, I do see CLNE hitting that $15 range. Yesterday it hit almost that. I think the high was $14.50 on CLNE. So, Devin, thoughts on Workhorse? Talked about Workhorse already. Rewind the tape, bro. Plug and TTD. All right. Let's look at this. All right, Plug and TTD. So TTD, a stock that I'm bullish on. There was an earnings overreaction a couple weeks. Actually, it was last month. But you are seeing now what is going to happen when a split, right? It's doing a 10-for-1 split. So it is going to be priced in the 50s, most likely 50s or 60s. Now, what you see with the split is you tend to see a split run up, as we saw here, going from, the middle of May all the way until now. The stock really rose in price by almost 22%. But what tends to happen after the split is you see a sell the news event. That's what happens after the split, right? Go back to Tesla, go back to Apple. As a matter of fact, there is a pretty lucrative or potentially lucrative options play here. You can buy long dated puts, right? I'm just talking about for the split. TTD as a stock, I'm very bullish on, right? Especially after the split, you will likely see more volume coming in, more options volume coming in, because it'll be a lot more affordable, okay? But if you look at the stock split here on Apple, right? What happened after the stock split? We saw a run up, right? And then a couple days after the stock split, you see Apple drop 25% because it is a sell the news event. Look at Tesla. Tesla had an insane run up after it announced their split last year. And then after split, again, another couple days after the split, just like Apple, you had a 35% drop on Tesla. So I expect the same to happen in TTD. God, they need to change that ticker name. It's too hard to say. Double TD. There you go. The same effect will happen here, right? And the split is even greater because I think Apple did a 4-for-1 split. Tesla did a 5-for-1 split. Double TD is doing a 10-for-1 split, right? So the effect might be even greater. Although there was an overreaction, I think, after this earnings, and I was happy to pick it up on this overreaction. Those in the Discord also were able to buy TTD for under $500, which in my view is a steal. However, I do expect that sometime towards the middle of June, maybe a day or two after the split, we will likely see a post-split effect. Now, I do think that regardless, nobody, just because something happened before doesn't mean it will happen again. You should not be too certain about it, right? And if you are looking to own this stock, it's sitting at the 300-day moving average, and you owe it to yourself to dollar cost average here if this is a stock you want to own. But just in terms of a pure swing trade, I would wait until right before the split, see how it reacts, especially if we have an if we have a price run up before the split, then I will likely open up a put spread or sell a call spread for a post-split event for sure. So look that out in the look out for that in the Discord. But very good question on TTD because of the split. Another stock that is seeing a split is, I think, NVIDIA, which, man, NVIDIA is just beasting it, right? It crossed that $700 threshold. We're now seeing some consolidation. We could potentially see some waviness here, right? It could drop to maybe like the 650 range and then continue back up towards 700 because their split is far away. Wait, June 10th? No, NVIDIA's split is in July. This is a misprint. NVIDIA's split is in July. But yeah, same thing. I mean, I will likely, and I own a lot of NVIDIA too. So I might sell calls. I might sell a call spread. I might buy a put spread. We'll see. But definitely I want to play those binary events because just based off of trend, there is a very lucrative play there for potentially easy money, no doubt. All right, let me go back to the chat. Best stocks for the long term. That's a very general question, man. The best stocks for the long term are blue chip stocks, but you are now buying at the high. But yeah, the best stocks for the long term are not that hard to decipher, man. I mean, you're talking about, what I think will have a major breakout within the next couple of years is Amazon. I think Amazon within the next year or two will have a major breakout for sure. What? Why's my phone dead? But yeah, I mean, they're not hard to decipher. I mean, you're talking about the blue chip tech stocks, right? Apple, Microsoft, Amazon, Google, etc., Facebook. None of these are at an optimal level. If you're just now buying, you've missed the boat completely for this year, and you will need to wait for a retracement. But QQQ, which is the NASDAQ ETF, SPY-V, which is the S&P value ETF, the SPY itself, I mean, it's not that hard if you're looking to build a long-term portfolio, but you are definitely buying near all-time highs. I think Apple has a good opportunity here because Apple retraced. And as I said before, I think that the narrative surrounding the Apple car has kind of been forgotten a little bit, or there's sort of has taken a back seat. But sitting at the 200-day moving average, especially in anticipation for any Apple car news that comes out later this year, I mean, especially if the news is significant, this is when you want to start dollar cost averaging into Apple, right? I do think anytime right now, post split price, if you can get Apple between the 100 to 120 range and dollar cost average there, that is your best bet for the long term, but could also be a lucrative play for the midterm. If they announce something in September about the Apple car and it's actually real, they announce some sort of partnership with, I don't know, some car company like Lucid or Neo. I'm not saying that's the case, but if it's very probable that they can announce either a partnership or they could say, hey guys, we've been working on this for a long time and we're actually a lot further than you think we are. And here are the prototypes for the Apple car. Oh my God. I mean, yeah, Apple will easily be a $3 trillion company very soon. So there you go. I think that is one blue chip stock right now that that could be undervalued. What about Ocugen? I just talked about Ocugen. Rewind the tape. Eduardo, I talked about Ocugen just a second ago. All right, Neo. Let's talk about Neo. And then, let's talk about Neo. And then I'll take Judy's question. Z, do you think crude oil will hit $100? Yes, I do think that crude oil, there is a chance that it will hit close to $100. Yeah, I'll talk about this in a second. So looking at Neo, I mean, this right here in the short term is a good time to take profits, in my opinion. You see it overheated, right? Overheated on the RSI. MACD starting to turn bearish. Volume is nothing to write home about. It is being right now roadblocked at the 100-day moving average. I think it's a very good time right now on Neo to either set a trailing stop limit or think about trimming your position if you are a short-term trader. If you're a long-term investor, and I mean truly long-term, meaning you absolutely don't give a shit about the day-to-day fluctuations, then yeah, for sure, just hold. But I do think that this is a time to either trim, set a trailing stop, or even sell calls against your position, which I will likely do after I get off the Discord. But sell a call against your shares in order to protect against any downside drop, right? Judy, your question was on oil, right? So let's take a look at CL futures. I mean, $70 a barrel, dude. And to think that this was just last year. I remember this like it was yesterday that oil went negative, -40. That is insane, man. That is insane. But yeah, I do think that oil could hit $100 a barrel or close to it. Don't bank on it hitting exactly 100, but I do think that it could hit close to it. One, you have inflation. Two, you will likely see just unprecedented demand for oil as the return to normal scenario plays out, right? Now, the only roadblock I see with oil, and if you're not a fan of geopolitical topics, then this might be boring to you, but and I'm certainly a geopolitical nerd, so never gets boring to me, but the only drawback I see with oil that could potentially roadblock it from getting to that $100 mark is any sort of U.S. deal with Iran, right? So Iran is one of the major oil exporters and producers in the world. However, there has been heavy sanctions on Iran due to political issues that we won't discuss here. But with the new administration, there definitely seems to be sort of a more diplomatic approach with Iran, where they are likely looking to strike a deal with Iran, thereby allowing Iranian oil back on the major markets. Because right now, Iran only sells to specific countries that I guess you could consider ostracized, right? So like Russia, China, etc. But they can't sell to the U.S. and the Western countries because of that, because of those sanctions. So if Iranian oil then re-enters the market, then that's considered, another source of supply, and then could dilute the price a little bit more. So that is the only thing that I think would prevent oil from hitting that $100 range. But for sure, I think it's doable. However, I don't think buying oil here is optimal. I think you will want to wait for a retracement. It is looking extremely overheated on the RSI as well. And trading oil futures, I mean, I love trading oil futures, but it is very risky. And you will want to wait for, when I'm trading futures, I wait for major retracements before jumping in, like with lumber, for instance, which to me, I think there is a potentially lucrative trade here off of this major support line that I drew a couple weeks ago. You want to wait for major retracements like this because, small moves in futures represent large dollar amounts, and you don't want to get shafted. But that's my take on oil. Hopefully that was helpful, Judy. And thank you for your question. All right. Bruno Valente. Z, thoughts on TRIT? All right, let's look. Man, I don't know what is going on with TradingView today, but it is definitely slow. What are my thoughts on TRIT? Well, TRIT definitely, just like a lot of other stocks that I just talked about, is being stopped at the major move at the 100-day moving average here, right? This major moving average. So yeah, just from a technical standpoint, you have to consider this. Like if you're in TRIT, hopefully you know how to read a chart just at a basic level, but this has been resistance on TRIT going all the way back to January. And we also have the 100-day moving average here to contend with. So, you could make a case for, if you're looking for an entry, you could make a case for buying it at this level here where it found support for a couple of weeks and was previous resistance. This would be in the $6 range. You could even put in a limit order in case, you do see a wick down there. But no, this resistance here is pretty clear to me. And if you were in it, hopefully you set a trailing stop limit or look to take profits in some manner. But yeah, that's those are my thoughts on TRIT. I wouldn't enter unless we hit that $6 range again, honestly. Or we break out of this resistance level here that you see. Is AMC dying right now? I mean, guys, either what I'm saying is completely just going over your head, or you guys are just panic asking at this point. Like, asking about AMC every 2 minutes. My analysis is not going to change. Bull flag. If you're a trader, then again, if you're just a pure trader and you're not supporting the movement, then you will want to wait. There's no reason to buy it here if you're afraid of losing money, right? Until you see either a breakdown of this flag, finding support around maybe the $35 range, or a breakout of this flag, right? If you're supporting the movement, then you're just gonna buy it, and you wouldn't be asking these questions. But yeah, you need insane volume to keep this up. I don't think you guys know. I'm not gonna look. I'm not gonna generalize everybody. I don't think that some of you who are asking these questions know the types of volume that it takes to upkeep this. I mean, look at what killed AMC last time. Now, whether obviously a lot of this was due to artificial factors, meaning Robinhood suppressing people from buying, but when the volume drops like this, there's no way that the price can magically stay up, right? These are market forces. I know that emotionally you want the price to stay up, but at the end of the day, there's a formula. This is mathematics, right? Supply and demand. If there is no demand for the stock, the price cannot go up. So we need volume, right, to come back to the AMC trade, or else the stock will likely see a retracement. You will likely see support at the $35 range, in which case volume will then re-enter because, again, supply and demand. The market will then want to support AMC back at the $35 range maybe. Now, what gives me pause and what scares me is what I talked about in the beginning of the video, where it looks like there was a story saying that the SEC was launching a probe into meme stocks. And when you see those headlines, that's usually the beginning of outside influence in the markets, right? So what railroaded us in January was the fact that exchanges like, it wasn't just Robinhood, by the way, even TD Ameritrade, they were limiting how many shares you can buy. And then from that, they went from limiting how many shares you could buy to only selling shares and not buying any new shares. And obviously creating downward pressure on a stock that folks wanted to buy. So when you see this stuff heating up, it does give me pause. We're not there yet. And it doesn't look like Robinhood is looking to do any sort of limitation, but I would not be surprised if more of this outside influence, whether it's the SEC or whether it's the exchange, the platforms themselves, whether they start limiting the purchasing of these meme stocks, right? However, all that aside, regardless, you still need volume for this to upkeep. Now, I wouldn't call it dead, because this right here, a bull flag at the end of the day, is a continuation pattern. So this consolidation, this up and down you see here, is what is expected within a bull flag. What would signal a potential collapse is if we start breaking the bull flag down, right? And then at that point, I will be looking to find support at the $35 range. That would be dire. That would be critical. Okay. So that's it with AMC. It's really not going to change. Y'all, George Bush, y'all talking about oil over here. Yeah. CLF looks promising. Yes, that's the other steel play. So X is one steel play. Cleveland Cliffs is the other, but this is not an optimal entry in my view. I would not buy CLF if you haven't bought it already. CLF is a beast off of the moving averages. You could just wait until it hits the moving averages again. Bounce off the 100-day 1 time, 2 times, 3 times, 4 times in the last 2 months, 3 months. So you'll want to play that trend. You could be patient here. You don't have to dump your money in something that can potentially retrace and has a good track record of buying off of the or bouncing off of the moving average. Shafiq, hey, what's up? You definitely don't have to do that, bro. Thank you. So that's a firm buy or sell on AMC. You're a clown, dude. All right. Plug, bingo, CCIV. Talked about Clove. Thoughts on Sundial. As I said with Sundial and some of the other pot stocks, to me, they were an easy buy off the 200-day moving average where we bought them from. There will be some profit taking as they are overheated now. There will be a resurfacing of the conversation of legalizing cannabis in the U.S., right? So, yeah. But in the short term, I think you missed the major move. We were up 70% on Tilray on Sundial off the 200-day moving average. There was a almost 100% gain. Insane, right? So again, if you're short term, you will want to set stop limits. You will want to take profits for sure. But buying off of the major moving averages on the cannabis stocks, and I did a whole video on cannabis stocks. I think it was the beginning of May, when they were just sitting, or middle of May, when they were just sitting here at the major moving averages, said that these are low risk, high reward entries. So, you know what? Let me take a look at the indices again. Oh wow. So yeah, the indexes started off strong, weakened a bit, and now they're back up strong again. So up almost 0.5% on the S&P, 0.3% on the Dow Jones. NASDAQ is up almost 0.75%, and the Russell, which is a small cap index, is down almost 0.2%. So yeah, markets looking choppy. This is actually probably a great time to day trade. Probably a great time to day trade. And if I wasn't doing this, which I love doing, but if I wasn't doing this, that's what I would probably be doing for sure. Yeah, let's look. If you were looking just at the SPY, yeah, man. There was some very decent day trading going on today. If you look at let's look at AMC. And by the way, if you want my day trading setup, hit me up on the Discord and I will send it to you. Or send an email on the forum on my site and I will send it to you. This day trading setup that I have right here, which, I mean, if I'm day trading, this is really the only setup that I use. AMC would have actually been pretty hard to day trade today. You could have potentially bought puts once it fell below VWAP, but in terms of support and resistance, it would have been very hard to day trade AMC today, honestly. Yeah. Anyway, probably a really good day trading day based on the up and down movement of the indexes. Let's look at the NASDAQ. Yeah. I mean, dude, if you had bought calls, if you're day trading, and this right here is the 1 minute chart, right? So if you're just day trading and you had bought 1 minute calls, 1 minute call. Fuck, I need more coffee. If you had bought calls off of the 200-day moving average, just right here on QQQ, I mean, man, when I see stuff like this, and the 200, it's not the 200-day moving average, the 200-minute moving average, because it's a 1 minute chart, almost at the 50 moving average on the 5 minute chart. I mean, just buying calls off of here, riding this move up, oh my God, super lucrative. Yeah. So if you want my day trading setup, again, either hit me up on the Discord or send an email on my site, and I'll gladly give it to you if you're on Thinkorswim. Kunal had a question. Kunal. Context logic. Any comments? Yeah, I talked about Wish quite a bit, man. I talked about Wish quite a bit. I think that Wish right now is finding support at the $10 range. Definitely trying to find support at the breakout of this channel. I did say that I thought Wish would also hit the $15 range yesterday. It actually hit I think it hit exactly 15, depending on what platform you're looking at. And you're seeing some profit taking now. But there's really nothing that's going to tell you whether volume is going to continue pouring in to Wish or not. I did show the options data on Wish, and it looks insane, dude. Here's the options data, right? Where was it? The $15 calls got 101,000 calls on the open contracts open on the $15 calls. That is absolutely insane. The open interest change is plus 13,000. You're seeing the open interest change on the $20 calls up 224%. just today, right? And these are for the June 18th expiration. So the market clearly is expecting a move up, at least based on options data. But you need the stock volume to come in and support that, right? So let's see. I do think that the $10 range is lucrative for a re-entry back into Wish. Frank, what do you think of AMC? Just kidding. All right. Let's see. Man, I might have to cut out because, man, there's some lucrative shit. Like, I definitely want to open either a short straddle on, actually, what is Chewy's IV? Because whether I open a short straddle or whether I open an iron condor will likely depend on the IV. Because if IV is high, you could sell a straddle for a lot of money, especially on a stock that you expect to stay within a range through earnings. Okay, so it looks like the IV is pretty low. It's considered subdued, meaning fancy word for meaning that it's suppressed or it's low, right? So I will likely, I don't know, I'll price it out. We'll see. But if we can get a decent amount for the short straddle, I might do that, which is a lot riskier than an iron condor because it's an undefined trade. Or I'll do an iron condor on Chewy for sure. So yeah. Oh wow. Glad I took profits on AHT. Damn, we had AHT calls yesterday that were up. How much were those calls up? I think they were up close to. I think those AHT calls were up close to 100%, if I'm not mistaken. Let me see. I think I had them in here. Anyway, yeah, I think they were up 96%, but I can't find them now. All right. I'll take one more question and then I'm going to dip out. So let's see. What question am I going to take? CCIV. All right. Well, I'll take Andrew's question. So he says, do you need full shares to benefit from a split? Or do partial shareholders get more shares as well? Yeah. I mean, think about it logically, Andrew. It's a split, right? So they're not going to say, oh, just because you have partial shares, you are now asked out. Like, of course they're legally obligated to give you, your split shares. So yes, but they will give you your split shares in the proportion that you own. So if you own, half a share, then they will give you half of basically the half of the 10-for-1 split or whatever split you're talking about. So yes, you'll still get the split and you'll get it in the proportion that you own, right? So yeah, we'll take a look at CCIV and then I will close this out. Thank you guys so much for joining. Oh, okay. Look, on Wish, it looks like it's this doji here. It looks like the consolidation is taking place around the $10, $11 mark. I wouldn't mind getting into those Wish calls, which should be really cheap right now if you're not already in them. I really wouldn't mind getting into those calls. Wish is actually up for the day, by the way. Even though this is a red candle, Wish is up like almost 4 to 5% for the day. So CCIV, and then I will dip out. And yeah, I really appreciate you guys. I hope you guys like these live streams as much as I do. Sorry, this morning I've been running low on coffee. I was actually traveling the last few days, so yeah. All right. Let's see. CCIV, this is a classic support resistance flip here, right? So we broke out of resistance, and we are now finding support at the resistance level, right? Obviously CCIV is waiting for the merger, but more importantly, it's waiting on updates on their on Lucid's car production, right? So I would hesitate to say that $25 is a good buy. However, there is a potential swing trade that one could make off of here because it is sitting at support. You could enter short-term swing trade that you can make off of here, but CCIV is very overheated on the on the RSI as well. I don't think this is a very optimal entry. And I always say to people, man, like, don't compare CCIV to Tesla. Okay. Just that's asinine. You want to compare CCIV to a car company like Fisker, which already produces cars in a very similar capacity to CCIV. So those of you, or to Lucid, right? So those of you thinking that, oh man, Lucid is going to be the next Tesla and I'm going to ride it from $25 to 700. No, that's never going to happen, right? Especially with new cars coming out from Audi and Porsche and some of these luxury makers that, to me, just look, for bang for your buck, look like a way better proposition than Lucid cars. But you want to compare to another small producing luxury auto manufacturer that is already in the market, like Fisker. Don't compare Lucid to Tesla, okay? So that's all I'll say about that. Anyway, guys, I will see some of you who are part of the Discord. I'll see some of you on the Discord. I definitely want to enter trades on earnings trades on Chewy. I will take a look at trades on Wish because I think that it is consolidating right now at a decent price point where we could potentially see a pop based on the options data. Obviously on AMC, I talked about it ad nauseum. Yeah, I think that is, I think on the cannabis stocks, you will want to look at taking profits in the short term. Did I miss anything? No, I think that's it. Anyway, guys, I really appreciate you guys joining. Love you all. Thank you so much for joining. And I love that you guys get value out of this. So the more that you tell me you get value out of it, the more I will keep doing them. All right. Stay safe out there, traders. I'll catch you on the next one. Peace.